There are significant differences between cash flow and accounting, and you have to understand the two differences. Now, most contractors have experienced that difference between cash flow and accounting firsthand at least twice a year. The first time you experience it is usually about the November-December time frame. We go sit down with our accountant or our CPA, and we do a little bit of year-end tax planning. And if we're having a good year, one of the bits of advice they give us on a regular basis is, you better go spend some money. You need to spend some money or you're going to get nailed with taxes. Right? So we go out and buy a new truck or we buy equipment, right? Just to try and burn up some cash, or at least supposed cash, right? That's that first time we experience it firsthand, because in the back of your mind, you're kind of wondering, okay, if I'm making all this money, where is it? Right? I don't see that cash, but my accountant's telling me I have to go spend some money. The second time we experience it firsthand is usually about March 15th, tax time again. We go sit down with our accountant or CPA one more time and they tell us, well, hey, John, you've had a great year this year. Here's what you owe in taxes. What's your response to that? Right? Chances are it's, oh my goodness, if I made that much money, where is it? Because it's not in the checkbook. First-hand difference between cash flow and accounting. You're seeing it on a first-hand basis. Now, there are two major differences between cash flow and accounting. The first, think about it, first, cash flow deals with the real dollars that are flowing into and out of your checkbook on a regular basis. Accounting tends to deal with paper dollars or numbers on a sheet of page that really sometimes don't even mean anything to us. And so those two major differences that you will see, first, equipment replacement cost versus depreciation, and the second is how loan payments are handled. Let's look at those just a little bit closer. First, equipment replacement cost versus depreciation. Depreciation is an accounting thing. Depreciation deals with how much we paid for a truck 2 or 3 or 4 years ago. Equipment replacement costs, on the other hand, is a cash flow thing. And that deals with what it's going to cost to replace that same truck 2 or 3 or 4 years from now into the future. And we're going to build that into today's pricing. Yeah, again, it's a very real expense. Your typical equipment replacement costs, what it's going to cost you to replace your trucks and your major pieces of equipment in the future, will typically be 25 to 35% more than the depreciation that will show up on your profit and loss statement. So right there, we're actually underreporting your expense, your cost of doing business, and we're showing that your actual profitability is 25% higher than it really is. Again, typical equipment replacement costs are 25 to 35% higher than the depreciation that you're able to write off. Now the challenge is, what does that depreciation do for you when it comes time to replace your trucks? Absolutely nothing. It's not like you can take your depreciation statement down to your local dealership and say, here it is, what do you give me? Right? It does nothing for you. It's purely a tax thing. It's purely an accounting item. Right? We have to focus on cash flow. We have to build what it's going to cost us 2 or 3 or 4 years from now to replace those trucks into our pricing today, so we have the money when it comes due.